The global financial landscape is approaching one of the decade's most significant public listings as Elon Musk's SpaceX prepares for its IPO. Institutional and retail investors are positioning for a major capital shift that is already reshaping allocations across technology, defense, and next-generation infrastructure. At the same time, the Federal Reserve's higher-for-longer rate environment is increasing volatility in growth stocks, forcing investors to focus on companies with real catalysts, durable moats, and measurable pricing power. Welcome back to Stock Vision. In today's video, we're breaking down some of the most important stocks and investment opportunities that investors need to watch right now. Like, share, and subscribe to Stock Vision for more stock market analysis. We cut through hype by analyzing fundamentals, SEC filings, competitive positioning, and macroeconomic trends. In today's analysis, we examine 3 high-conviction opportunities tied to the aerospace and AI-driven technology boom. SpaceX, expected ticker SPCX, projected IPO price 135 Alphabet, GOOG, current price 362.14, and Marvell Technology, MRVL, current price 288. Let's start with the financial community that is intensely focused on the final pricing stages of the SpaceX public offering ledger. With the expected initial price set at $135 more per share, the company is commanding an implied public market valuation of approximately $1.75 trillion. Institutional demand in the private secondary markets has built a massive upward trajectory over the past 24 months, with block trades consistently clearing at substantial premiums ahead of the formal SEC registration. This persistent accumulation reflects deep institutional appetite for scaled, cash-generative technology assets that operate outside traditional cyclical consumer constraints. SpaceX operates as a dominant global provider of space transportation, aerospace manufacturing, and low Earth orbit satellite internet infrastructure. The company's primary operations are split between its launch services division, utilizing the reusable Falcon 9 and Falcon Heavy rocket architectures alongside the development of the Starship platform, and its Starlink telecommunications segment. By successfully commoditizing space access through structural rocket reusability, the company has established a near monopoly on commercial satellite deployments, International Space Station logistics, and sovereign defense launches. The financial core of SpaceX has shifted dramatically from an asset-heavy research endeavor into a highly scalable, cash-generating engine. Internal operational data indicates that total annual revenue has cleared $15 billion, spearheaded by the explosive subscriber growth of the Starlink network. Starlink now supports millions of active commercial, maritime, enterprise, and government terminals globally, delivering high-margin recurring software-as-a-service style revenue. The company's launch services operate with stable profitability, utilizing vertically integrated manufacturing to keep marginal costs far below traditional defense prime contractors. The primary catalyst for structural expansion lies in the global deployment of the Starlink satellite constellation. As the network scales, it is capturing highly lucrative enterprise telecommunications contracts, maritime shipping connectivity, and remote sovereign defense data links. Furthermore, the operational maturation of Starship represents a paradigm shift in payload capacity, drastically reducing the cost per kilogram to orbit. This allows for the rapid deployment of larger, more powerful V3 satellites, unlocking ubiquitous global direct-to-cell communication layers and deep space heavy cargo infrastructure that no other entity can currently match. Investing in a frontier aerospace architecture carries inherent operational execution risks. The capital expenditure required to continuously build, launch, and replace low Earth orbit satellite constellations is immense, requiring perfect operational execution to prevent cash burn. Regulatory friction presents another hurdle, as global spectrum allocations, orbital debris mitigation policies, and international telecommunications licensing involve complex geopolitical navigation. Additionally, any structural failure during the scaling phase of the Starship platform could result in unexpected delays, impacting long-term deployment timelines. The second stock, Alphabet, has demonstrated robust equity price action, with the stock stabilizing near $362.14 per share after testing historical resistance in the upper hundreds earlier in the year. The stock has successfully absorbed broader macroeconomic tech pullbacks, supported by aggressive institutional accumulation during minor market corrections. Wall Street continues to reward the company's capital allocation efficiency, particularly its aggressive balance sheet adjustments and its strategic corporate venture capital holdings, which are becoming core valuation drivers. Alphabet is a global technology conglomerate anchored by its core Google Services segment, which includes Google Search, YouTube, Android, and the Google Cloud Platform. The company generates massive free cash flow through its digital advertising ecosystem while scaling high-margin enterprise cloud infrastructure. Crucially for our analysis, Alphabet was an early strategic institutional investor in SpaceX, participating in early-stage financing rounds to secure a multi-billion-dollar private equity stake, that will see a major liquidity valuation adjustment as the public space listing formalizes. Alphabet's financial foundation remains extraordinarily strong, supported by unmatched capital reserves and excellent cash generation. In its latest quarterly performance filings, the company reported revenue expanding at a healthy double-digit year-over-year clip, driven by a sharp acceleration in Google Cloud performance, which grew over 25%. Trailing 12-month free cash flow sits comfortably above $64 billion. This immense profitability allows the company to execute tens of billions in share buybacks, while simultaneously funding a massive capital expenditure program to expand its next-generation computational infrastructure. Alphabet features multiple structural growth vectors, starting with the immediate revaluation of its early-stage corporate investments as SpaceX goes public, unlocking hidden book value on its balance sheet. Operationally, the integration of advanced Gemini artificial intelligence models across its core search and enterprise cloud portfolios is driving higher average revenue per user and sticky multi-year enterprise backlogs. Google Cloud is benefiting directly from the AI infrastructure build-out, as developers and hyperscale enterprises lease vast computational layers natively tuned for massive language model execution. Alphabet is a core foundational asset that deserves a prominent place on any long-term structural technology watchlist. The company provides investors with a rare combination of stable, cash-generative core monopolies alongside asymmetric upside via its leading cloud infrastructure and deep pre-IPO equity investments. Monitoring Alphabet's ability to defend its search margins while expanding its enterprise AI backlog will provide key data points for portfolio integration during market soft patches. Before we analyze our final growth stock, take a brief moment to support the channel. If you appreciate this deep, fundamental research and data-driven equity analysis, please hit the like button and subscribe to Stock Vision. Your engagement helps us continue delivering professional, institutional-grade market analysis without the sensationalized clickbait found elsewhere. Drop your thoughts in the comments below, let us know which of these names you are currently tracking, and share this video with fellow disciplined investors who focus on long-term fundamental value. The third stock, Marvell Technology, has displayed explosive market momentum, with its share price surging to $288 per share. This price action reflects intense institutional rotation into highly specialized semiconductor companies that provide the essential hardware links for scaled data infrastructure. The equity has experienced significant volume-backed breakouts, consistently outpacing the broader semiconductor indices, as institutional funds realize that computational power is useless without the advanced networking architecture required to connect distributed nodes. Marvell Technology is a leading fabless semiconductor company, specializing in the design and development of high-performance data infrastructure architecture. The company focuses on processing, moving, storing, and securing global data through advanced computing, networking storage, and custom application-specific integrated circuit platforms. Marvell's technology is deeply embedded in hyperscale cloud data centers, carrier telecommunications networks, enterprise systems, and next-generation automotive computing, positioning it as an essential picks and shovels provider for modern high-bandwidth communication networks. Marvell's financial statements highlight a profound structural shift toward high-margin data center applications. In its primary fiscal filings, the company delivered record net revenue of $1.95 billion in a single quarter, representing an astonishing 63% increase year over year. This explosive growth is driven by its data center end market, where revenue is accelerating due to the rapid scaling of custom silicon programs and electro-optics shipments. The company maintains a strong non-GAAP gross margin of nearly 60%, reflecting high pricing power and a robust product mix. The investment thesis for Marvell centers on the structural transition from traditional copper wiring to high-speed optical interconnects within massive data clusters. As artificial intelligence models scale, connecting thousands of GPUs requires advanced optical digital signal processors and custom silicon architectures to prevent data bottlenecks. Marvell's newly launched 3-nanometer wafer custom platforms and partnerships with leading hardware manufacturers ensure it captures a massive portion of this infrastructure spend. Additionally, the expansion of low Earth orbit satellite constellations creates a direct demand for Marvell's hardened high-performance communication chipsets. Marvell Technology is a premier high-growth infrastructure play that demands strict monitoring on a long-term watchlist. The company operates as an indispensable backbone for both hyperscale cloud computing and next-generation telecommunications networks, ensuring structural relevance regardless of which specific AI software model wins the consumer race. Watching for optimal entry points during broader sector pullbacks can offer disciplined long-term investors an attractive way to participate in the data movement boom. If you enjoyed this analysis, don't forget to like, subscribe, and turn on notifications for more stock market insights from Stock Vision. Thanks for watching, and we'll see you in the next video.